So it's quite an interesting question on audit and ethics. So I read the question first. Although it's always important that you get to start, any questions that you do in your exam, you shall always start by reading the requirement. These are scenario questions. Always read the requirement. You'll never go wrong if you read the requirement. So required, they want us to describe two safeguards that 𝐀𝐽 and associates could apply to manage the conflict of interest that might arise if the firm accepts the appointment by RFL as their external auditors. 2 marks. Evaluate 4 potential risks to independence in respect of the audit of MF, and in each case, state the type of threat arising from the risk. C, describe 5 procedures which you could undertake during the audit of the wages department as a result of the audit manager's assessment of the increased risk of what here? Fraud. Then now we read the scenario. So now we are reading the scenario, my good students. We are told here you are the audit manager in 𝐀𝐽 and Associates, an audit firm that specializes in the audit of retailers. The firm currently audits Media Company, MF, a food retailer. MF main competitor Rupa Foods Limited, RFL, has approached your firm, 𝐀𝐽 and Associates auditors, audit firm, to act as its auditors. MF is concerned that if 𝐀𝐽 and Associates audits both companies, then confidential information could pass to RFL. Anne Muli has been the audit engagement partner for MF for the last 8 years. Her daughter, Rachel Njoki, has just accepted a job offer from MF as a manager. Rachel's employment contract states that if a bonus is to be paid, it will be awarded as shares for MF for the last 8 years. Her daughter, Rachel Njoki, has just accepted a job offer from MF as a manager. Rachel's employment contract states that if a bonus is to be paid, it will be awarded as shares in MF rather than cash. MF has also offered 𝐀𝐽 and Associates a 5% bonus on top of the audit fees if this year's audit can be completed in 3 weeks earlier than last year. So these are contingent fees. Fees that is dependent on a particular outcome. So you're being pushed to work under undue pressure to finish this work very fast. So there must be something that these guys would want to hide. As much as, of course, at times the clients are being pushed by circumstances, audit is not an emergency. This is an obligation they knew they had right away after producing their financial reports. After their financial reports are signed, they're supposed, in this case here, to call in an auditor to come and review the work and provide an opinion. So when I come to your firm and then you tell me that, hey, you need to finish this thing in 3 weeks, even if you're offering a percentage, even if you're going to offer an extra fee for me to work quickly, I'll be able to raise a red flag. This is to reduce the demands on the finance director's time as he is busy working on other projects. Great questions here, ladies and gentlemen. Great questions here. Now, the major concept that is being tested here is, like, for example, of course, you guys know that I run an audit firm, Aura and Co. Some of our businesses, of course, that we are auditing are hotels. So if currently, for example, I'm auditing White Sands Hotel in Mombasa, and then in Mombasa, we get another hotel there. Let me call that hotel XYZ. It approaches me to audit it, knowing very well that XYZ and White Sands Hotel are what here? Fierce competitors. So then the question is, as an auditor, should I accept this engagement with this competing firm with my current clients. In most cases, ladies and gentlemen, competitors will not be happy for you to audit both of them. I mean, I've been also in this software business. You'll get a client telling you that, you know what, if I buy this software from you, promise me that you'll not sell this software to XYZ, my competitor. So those things happen. The same case in this case here with auditing. WhiteSands, for example, you know that the moment I start auditing its competitors, there will be information leakage from WhiteSands to this competitor. Because I mean, as an auditor, I happen to be knowing quite a lot about this current client. Now, let me ask you, if you're running your own firm, would you want, in this case here, your current auditor to be the auditor of your competitor? If you're running a firm currently, you're the CEO of that firm, and you have an auditor today, around the company, would you feel happy if your auditor was also to be engaged by your competitor? Be very honest with me. Be very honest with me. Of course, you're right. You can't be very, very happy. But again, remember, as an auditor, I'm in business. In these tough economic times, how would I refuse a client who has just come knocking on my door? It becomes very, very hard. So, ladies and gentlemen, then what we are advised to do as auditors by our governance, regulatory authorities like ISPAC, it's very, very easy. Ensure that both companies, your current firm, like if it's WhiteSands, knows that you have been approached by their competitor. And this competitor is coming on board, ensure that you give them information as to the fact that currently you are auditing these other guys. So pass that information, first of all, to them. So what if in this case here, for example, WhiteSands comes and says, hey, I'm not comfortable, I don't want to be in this engagement. Then as an auditor, I'll look at my returns. Where in this case here is my bread buttered best. If it is this side of the competitors, I will be able to, in this case here, mute WhiteSands. I go to the competitors. But again, there is a lot of work to be done. There's a lot of due diligence, because you may be running away from this firm and then you get, in this case here, to a bad firm, which perhaps doesn't pay auditors. All right. But in most cases, these people, if you handle them very well, remember, audit, ladies and gentlemen, is all about negotiations. If you come and handle them very well, these two competitors, tell them, fine, in this case here, I'm like a polygamous man. Yeah, these are my two families now moving forward. But what I will do, I will ensure that there is a Chinese wall in between the two of you. The two of you will never get to meet. So this Chinese wall, how do I build it? I will have two engagement teams. One engagement team, a separate team from my staff, in this case here, that will be able to handle WhiteSands. And another team, in this case here, that will be able to handle what here? This other competitor. And then I will build a Chinese wall between my two teams, such that these two teams should never get to talk to each other. Theory. These are Gen Zs. These are young men. Will you follow them after work to know who they're talking to, who they're talking with? You can't. But at least in the exam situation, you say that I'll be able to appoint two engagement separate teams, and then I build a wall in between them to ensure that the two teams are not able to speak to each other. All right. So you can negotiate with those people in a way that they'll be able to do what here, they will be able to understand. And again, working with these competitors is not a bad thing. Because like now I've told like Aura and Co, I mean, most of what, I don't know whether it is how we started there, but most of these big hotels in Mombasa, they love us. Yeah. So you'll always get, we have 1, 2, 3 new clients from the hotel that is signing up with us. You see now it means automatically we have got great experience with hotels. So when this new competitor is coming and I'm already in the hotel industry auditing hotels, they'll be able to get a lot of what year experience with my work. I'll be able to see, for example, how they're pricing their food, how they're pricing, in this case here, their rooms. I'll be able to see the kind of internal controls. Now that I've been working with competitors, I'll be well versed with what I should be able to advise them in my letter of recommendations. All right, so let's answer these questions now. With that background, let's get to answer this question here. So we are told here, required, describe 2 safeguards that KK and associates could apply to manage the conflict of interest that might arise if the firm accepts the appointment of RFL as their external auditors. Remember, up there we were told that RFL is a competitor of MF. So already we have discussed that, ladies and gentlemen. I should only come here and read the answer. Read the answer here. So safeguards for conflict of interest, confidentiality agreements, and ethical walls, what we call the Chinese walls. Separate audit teams should be assigned to MF and RFL with strict access controls to ensure that confidential information is not shared between the teams. Staff must sign confidentiality agreements. For example, the team auditing MF should not access any information about RFL. Number 2, we have informed consent and a disclosure. Yeah, A and associates should disclose the situation to both MF and RFL and obtain written consent to continue engagement with both. Transparency about internal safeguards helps build trust and professionalism. So, ladies and gentlemen, I hope now with that discussion that we have had, you have like a rough idea, which you'll be able to now use whenever you hear that an auditor is being called upon to audit competitors. Is that true? At least you have a rough idea. You have a rough idea. You have a rough idea. Is that okay, ladies and gentlemen? Yeah, great. So from there, then we go with this other question here, question number 2. Yeah, so question number 2, what does it talk about? So question number 2B, evaluate 4 potential risks to independence in respect of the audit of MF, and in each case, state the type of threat arising from the risk. So, ladies and gentlemen, remember the threats. We always work with what we call surface. The threats, we always work with what we call surface, always. Surface. So surface, remember the first one is self-interest. Self-interest, yeah. Like where we were seeing that lady is being given shares. Of course, when she's given shares, ladies and gentlemen, what will be happening? Yeah, when you are given shares in a firm, so for example, you have, say, 1 million shares in Safaricom, then automatically, ladies and gentlemen, you will have a self-interest issue at Safaricom if you are to audit them. Because every time you are auditing them, you would want to give a clean audit opinion. Whenever you give a clean audit opinion, then the share price goes up. So you have an interest to protect. The interest to protect there could be, for example, you have your husband, a family member, being a senior manager at Safaricom. Should you go and say, in this case, you're giving them a bad audit report, then your husband will be fired. So it could be your daughter. Like this question has got some daughter there. So that is self-interest. And then A stands for what here? Advocacy. Thank you, Beatrice. Advocacy. Surface. F stands for familiarity. Like in this question, if I remember very well, because I marked this exam, familiarity, we were told that that lady had worked there for 8 years as the engagement partner for 8 years. 8 years, those are too many years. Ideally, you should rotate. You see, like in America, You can't be an auditor of an institution for more than 3 years. 3 years is the maximum duration. And then another firm takes over. In Kenya, of course, you'd rather die than resign, right? Because getting jobs is very, very hard. So you'll get, in this case here, one audit firm having been an auditor of a company out there for even 15 years. Not a problem. But you, as the managing partner, for example, myself as the managing partner of 𝐄𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬 the operations in the companies that we are auditing. That person, we call that person an engagement partner. All engagement partners should have a maximum of 3 years in a firm. From there, what do? You rotate them. So I expect you to be using those as safeguards. Rotate the engagement partners often. Yeah, because familiarity really, the moment they get used to each other, there is no way they will be able to correct them. There is no way, audit is all about exercising professional skepticism, whereby you are doubting everything that you are being told. The moment we get used to each other, we are doing high five. At times, in this case, you're taking selfies with our client personnel. The moment we become so familiar with each other, we become family. So we shall be forced in this case here to issue just but a good opinion, what we call unqualified opinions. Then we have the concept of intimidation, as Beatrice is telling us here. So intimidation, of course, this will come when you want to give like a bad audit opinion. Yeah, then you get somebody coming one morning with a gun on your head telling you, you dare give us that bad opinion, then you get a way of passing, or rather, even, we are going to kill you. The moment you feel that you are under undue pressure to give a good opinion, then you are intimidated. Yeah, I never saw intimidation in this questionnaire as a threat. Then we have self-review. Self-review, never forget that self-review happens whenever you are engaged in an audit assignment. So you go to a company and then they give you an audit. I came here to provide an opinion regarding their financial statements. But the first thing some of these small firms will do is to tell you that we don't even have those financial statements. Please make these financial statements for me. They tell you, please do this audit schedule for me. Not audit, but a tax schedule for me. So if you prepare those financial reports, the figures they are in, they will be approved by the management, and those figures now will be given to you to audit them. If they are given to you to audit them, then you will be relooking at your own work. Ladies and gentlemen, when you relook at your own work, you will not be skeptical. You will not, in this case here, have that doubting mind who would want to doubt themselves. And even if you are to identify an error, for sure, you can't tell anybody that you are wrong. So whenever you hear of ethical threats, always remember that, and that language I've used, ladies and gentlemen, is so nice. I hope that will be able to really suffice for now. Because of time, just allow me to read the answer, right? So we have B, risks to independence and related threats. Long association with the client. Remember, this is a scenario question. Try to pick names of people, names of companies. So the risk, Anne Muli has been partner for 8 years. Threat is familiarity threat, reduced objectivity. She'll not be objective. Over the 8 years, you've known each other very well. So example, reluctance to challenge MF's management decisions. These are your friends. You don't want to expose them. They've made a wrong decision, but you're fearing to even tell them because, last weekend you were with them. Because honestly speaking, ladies and gentlemen, 8 years is too long time. I've been an auditor, ladies and gentlemen. It reaches that time when that veil between yourselves and the directors of that company is open. Trust you me. There are many times you'll even get, for example, like some of my audit clients, they tell you that, you know what, my daughter will be getting married over the weekend. If I've been with this gentleman auditing him for 8 years, honestly speaking, it doesn't matter whether I'm made of metal, I will be forced. Or this person has died. So, and the moment you start Now getting into these other ventures with those people, that familiarity veil will be broken. Now in this case here, you will be very familiar with each other. And once you're familiar, you can't challenge what they are doing. If they come under, in this case here, lie to the public, actually you'll be there defending them. You become their advocate. And once you become the advocate, then that independence, I mean, you will not be objective with your work. So it's wrong that this lady called Anne Mully has been the engagement partner in this organization for a whole 8 years. Familiarity. I mean, it's funny. Like some time back, I had one of my staff member being married. Yeah, these things being married by a staff from the other side. So these things happen, and they normally happen whenever there is a long stay with those people. Number two, another risk, ladies and gentlemen, employment of close family member. Risk, Anne's daughter works for this company and receives shares as bonus. Threat, Anne and her daughter, this is one under, I mean, they're one people. So these shares, basically, they are coming to who? To Anne. So basically, these are self-interest. Self-interest because they'll be getting the bonus, right? So they have an interest to protect. So it means that there is no way then Anne will be able to go forward and tell them that they have a bad opinion. If they have a bad opinion, then they lose the bonus. So they have a self-interest. This again, I mean, if it's my daughter who is working in the company that I'm auditing, this is now even more than familiarity. This is family. Audit opinion might be influenced to protect her daughter's financial interest. Then there is another risk, ladies and gentlemen, another risk on self-interest where there is a contingent fees. Contingent means on condition. It's a conditional fees. And on condition you finish this work in 3 weeks, I'll be able to give you a 5% bonus. That's a contingent fees. As auditors, we are not allowed to accept contingent fees. In most cases, like if I give you practical, like always giving practical situations, and we have always refused this. So you'll get somebody telling you that, hey, I have a debt with the KRA. They have come and they have done self-assessment, not self, but they have done, in this case, in-depth assessment, and they have slapped me with, represent us, and for any coin you save, we shall give you 10%. We shall give you, oh, my internet is unstable. Let me know once I'm back. Let me know once I'm back. I can see my internet is unstable. Are you able to hear Mwalimu now? Are you able to hear Mwalimu now? Can put off my camera. Yeah, thank you so much. Let me put off my camera like that. So like risk here, MF offers a 5% bonus for early completion. This bonus, of course, will be pegged on something, right? So it's a self-interest. These guys will want to protect that bonus, compromising audit quality. Example, skipping some tests to meet the deadline. We are supposed to put great tests here, the 𝐅𝐸 analytical procedures, inquiries from third parties, inspections, observations. There is a lot that I need to do as an auditor, but because I'm chasing the bonus, I may skip some audit tests. Potential client conflict, KK auditing 2 competitors, there is very, very likely that we may have a self-review threat, a confidentiality and self-review threats. Now, ladies and gentlemen, remember, like when I start auditing like a hotel in Mombasa, the very first hotels we audited, we must understand the environment of the firm and even the industry in general. So now I'm understanding the environment, the industry in general. Of course, for example, I'll be looking at the seasons when these, for example, guests come in plenty. Maybe they come during this and this and this time. You see, some of the information that I've collected from auditing, for example, White Sands, I could very easily borrow it and use it for this other organization to cut on my costs. Yeah, there'll always be those self-review threats. So the audit team could use MF's strategies, in RFL's audit. Ladies and gentlemen, part C of this question, in the interest of time, you can see part C, they want me to describe 5 procedures which you could undertake during the audit of the wages department as a result of the audit manager's assessment of the increased risk of fraud. Look at this, I will underline 5 procedures which you could undertake. So the 5 procedures, so long as I remember these procedures in the context of 𝐅𝐸𝐸𝐸𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬 remember what that stands for. Remember, I've taught most of you those 38 lessons. I think I think this is the 38th lesson now. The people that have been teaching these things. Yeah, R-A-E-O-U. R stands for what? Analytical review procedures. I love that. Yeah. And then we have A for inquiries. You'll need to do lots of inquiries. Yeah. Thank you so much. Inquiries and third-party confirmations. I stands for inspection. Then we have observation. Yeah. Observation. And then we have lastly, recalculation and what we call reperformance. Remember the last one in full is recalculation. You don't have to write notes. I've already given you the notes. Recalculation and reperformance, like that. Great. Recalculation and reperformance. Recalculation and reperformance. So then now this is what you'll be doing. Once you have that in mind, you'll be able to do quite a lot. So for example, I will be forced, if it's wages, yeah, I'll be able to recalculate the statutory deductions to confirm valuation. Yeah. Even completeness. Yeah. In most cases, you should strive in this case here to give those assertions. As you talk about this, also try to see whether you can put in some assertions. Even if you don't put them by, you should be saying like to confirm, to do something like that. Very, very important. So those audit assertions, do you still remember them? The ACCA cover, ACCA cover P, like that. The ACCA cover P. ACCA cover P, like A is accuracy. Yeah. Completeness. Thank you very much. Completeness. Yeah, we have the cut-off. There is an existence somewhere. Classification. Yes, you are very, very good students. Okay, where do I get them? Occurrence. Thank you very much. Rights and obligations. Rights and obligations. The evaluation, presentations, and disclosures. Thank you very much. So then in this particular case, once you know this language, you will never get a fail in audit and assurance. You will never get a fail in advanced audit and assurance. Never, never. So I can just read the answers. So the audit procedures for wage departments, fraud risk. So I will be able to do the analytical review of payroll trends. So remember, analytical review means what? Your comparisons. Analytical review means what? Your comparisons, benchmarking, comparing, for example, monthly payrolls, comparing the payroll of this year vis-a-vis last year. In this case here, comparing the company's payroll vis-a-vis the whole industry payroll. If you have information about the industry, like on average, these competitors, you'll know this competitor charges this much, this competitor pays this much, you are analyzing. So in this case here, analytical review of payroll trends, compare current year payroll with the previous periods or budgets to identify any unusual patterns. Yeah, if for example, ladies and gentlemen, you have payroll of last month as 10 million, and then this month you can see payroll is 6 million, then this will be a very good test to check, or rather procedure to test completeness. Is this payroll really, really complete? If it's complete, ladies and gentlemen, it should be quite close to what last month was. And if there is a significant increase, then I should be able to go to the HR manager and ask HR manager, did you have any significant salary increases this month? Or were you able to hire some people this month? because I'm testing accuracy. I'm testing, in this case here, completeness. Yeah. So analytical procedures for wages fraud. So number 2, tests for ghost employees. Yeah, tests for ghost employees, physically verify selected employees exist and whether they are what year they are active, whether they are active. Yeah, we can read this. So test for ghost employees. So basically when you are testing for these ghost employees, in most cases you'll use observation. So an observation you could have, for example, depending on the size of this particular organization, like you could close the company and call upon everybody to come, the head count. Bank account verification, check for duplicates or suspicious bank accounts among what year? Among these employees. Yeah, so in this case here, basically ask for bank statement. When you ask for this bank statement, you are inspecting to see, in this case here, for example, the payroll that we have. It has Mr. A, Mr. B. So Mr. A, we can see, was owed 100,000 at the end of the month. Was this 100,000 paid through the bank account? Could we be having, in this case here, employees who happens to be having multiple bank accounts? It will be very, very important. Review of termination and hiring records. You are inspecting records here. Confirm all listed employees were properly hired and terminated. Employees were removed. Then it will be very important also to check segregation of duties. Don't tell me that the HR manager is the one who is doing everything from just hiring. She's the one who is firing them. Of course, those are some of his duties. But again, paying, to segregate is the opposite of aggregation. Aggregation is when you put things together. Segregation is when we expect some function, as it progresses from point A to point B to point C. So point A is done by a different person, at point B is done by a different person, point C by a different. We say that function has been segregated, being done by different people. So for segregation, I would want, in this case here, to observe. So I will ask, in this case here, how is your payroll process? Who is making this payroll, right? How are the approvals done? All right. And then I'll be able to stay somewhere and observe whether that is happening. Ladies and gentlemen, this is the proper procedure for answering this question. Audit procedures for wages department, fraud risk. Number 1, we have analytical procedures. Perform analytical review of payroll expenses by comparing current year figures to previous years and budgets. Identify unusual increases, spikes, or discrepancies in total payroll expenses or by department. Then we have A for inquiry, inquiries and third-party confirmations. Inquire with the HR manager. Inquire with the HR manager and payroll staff about new hires and terminations. Confirm employment and payment authorizations with the department heads. You're talking to them. Request third-party confirmations from banks for account ownership if fraud is suspected. Inspection. Inspect employee personnel files for proper hiring. Inspection, you look at documents. Review payroll records for duplicated bank accounts, details, or invalid ID numbers. So get, on a sample basis, a few ID cards from employees. Of course, you talk to the management to give you ID cards. Examine supporting documentations for wage payment, such as payslips, contracts, and bank payment schedules. Observation, observe the payroll processing procedure. Remember the observation, you're looking at people in action. There's a difference between inspection, things are stagnant. You're basically checking records there. But observation, you are looking at things happening. So observe the payroll processing procedure. So we have a payroll department. Just go and hang around them there, you as an auditor, to see what happens there. Are there segregation of duties? Observe employees at work to verify physical presence and match them to payroll records. Then we have lastly recalculate and reperformance. Recalculate the net pay for a sample of employees based on gross pay, deductions, and tax rates. Reperform the payroll register to ensure totals match with the actual payments made. Match salary amounts to authorized rates in employee contracts. So, ladies and gentlemen, we have come to the end of this discussion. It's my hope that you have enjoyed the session. So we have this session that we call low hanging, which we are charging 2,000 shillings per subject, right? But of course, if you are in our classes, you don't pay. If you had paid your fees earlier, you don't pay for these low hanging classes. They're called low hanging fruits classes. They are very, very important. Yeah, like this horizontal assurance, the moment I do like 8 sessions with you, you will be perfect. You will be perfect. Yeah, so if you are interested with our low hanging fruits and there are some offers there, please give us a call. Our number is 0793 555 000. 0793 555 000. Thank you so much. Be blessed and bye.